over the weekend, we were bombarded with articles and all sorts of input from various places about what happened on Thursday, and even beyond that, beyond Thursday, back from Thursday in the platinum sector, notably this time at the Marikana mine in the Lonmin facility near Rustenburg, north of Johannesburg. Now, there are certain things that are absolutely cast in stone. This is a tragedy. It's a human tragedy. It's a corporate disaster. It's had economic impact. We've seen the bond markets, we've seen the rand market, and to a lesser extent, I suppose, the overall market of the JSE. There's also been reputational country damage to South Africa. And on that note, let's go now to London, to the desk of NOMURA International, where Peter Attard Montalto, who follows this country assiduously, is waiting to chat to us. Peter, you say in your note that you sent me last week, it says, this is depressingly familiar to investors, but severely depressing this time, I think. I mean, much worse than usual.
Exactly. It started out basically as, if you like, a normal quote-unquote mining union dispute, but clearly has escalated into something totally different now, and basically taken particularly equity investors, but also wider bond market and equity market investors, as you mentioned, by surprise, and is where people are considering now the usual, structural issues in South Africa around the structure of unions, labour laws, and things like that, but also more deeply about the power structure between unions, the ANC, and indeed, what's happening in the future around that, particularly given we are seeing more upstart unions coming in a number of different sectors which are showing much more aggression.
I don't know if it's right to apportion blame to anybody, but of course the blame game has begun. What was the reaction of yourself at the desk and also from other people that you speak to about the South African situation? Who was at fault here? Was it the unions for not keeping an eye on what was going on? Was it Lonmin for being too sanguine about the needs of the workers and the worries of the workers? Was it the government? Was it the police? What do you think?
I think it's very difficult to apportion blame to anyone specific. Clearly a series of events happening, bringing in a number of different players, the two unions of course, but the way the government reacted, the police reacted, coming on the scene quite late as well, as they have done in the past in these sorts of disputes. But I think it's impossible to even attempt to try and tag blame onto one individual party. It's about the general makeup of South Africa, and how these things work and play out is what's interesting and concerning to investors than trying to apportion blame.
Apart from investors, there's also another group of people that will be watching this very, very closely indeed, and that's the ratings agencies, and that's probably why the bond market was the quickest to react. Okay, the rand went 10 cents weaker quite quickly, but it was the bonds that are really the ones that are worrying a lot of people. Do you think the ratings agencies are sort of tut-tutting and as sharp intakes of breath and getting ready to knock us down a couple of points here?
Well, the interesting thing about the rating agencies really is that it plays into what they've all already said, which is it's these long-run, deep, structural, social-related issues that are key for the rating over the medium run. It's not short-run fiscal policy, it's not short-run debt dynamics that are of the major concern to the rating agencies. And that's, I think, the point the government has missed and the National Treasury has missed in the past, is they've come out with statements after comments from the rating agencies saying, no, this is all ridiculous, all fiscal plans are great, etc., which they are in the short run, but it misses the point fundamentally that it's about the shift of power within the ANC and the future of policy more generally around economic and fiscal policy in the long run after the 2014 election. It's about social issues and things like unions and what we've seen last week, which are really playing on the rating agencies' minds. And I think the government has to realise that, and again it comes back to the need to look at those structural issues in the economy and in society more generally, not just some of those shorter run fiscal issues that are to play.
This sort of heightens the importance of what's going to happen at the end of the year, the ANC conference, and also in the light of what happened over the weekend where Mr. Julius Malema made his presence felt by visiting, and he really made an enormous impression on the surface anyway with the workers, and it was very well covered by the South African media. Did you get that in London as well?
It was very interesting, actually. A number of more equity investors this morning commented on that to me. I think in the past people have thought Julius Malema is, some sort of person that turns up, a front man, or just a voice coming out with certain crazy policy ideas. But the fact he turned up after this tragedy, and as you say, the reception he got, I think have made people think that the idea and the concept of Julius Malema and what he does certainly is not dead, even if he has been expelled from the ANC, and he is, and the people behind him, what he represents, is still an important factor to consider in South Africa over the long run. We shouldn't overplay this too much, but it is still there as a factor. And as you say, with Mangaung in December, this all plays into that and into policy as well. In particular, let's not forget that there are serious structural policy issues around the mining sector, not least around the mining super tax, but also around price controls for output, review of the mining charter, all these sorts of things going on in the background as well, which are affecting the competitiveness of South Africa.